Cool. Drag this over. Talk about this. All right, welcome everybody to the first week of December. My name is Spencer Riegle. I am representing DARMA Capital Trading. Each week we hop on and we talk both on market outlooks from a macro perspective, also dial in and kind of look on more of the micro scale, both on a weekly basis, and then we talk about some of the here and the now, expectations for the remainder of the week, and we see the week as the close on Saturday at 0 UTC, which I am based in Chicago, so that's right around 6 o'clock Chicago on Saturday, and then we start up a new week, right? And so each week we hop on here, and it's our stream is on Tuesday, so we get through the first opening, what we consider to be the opening range of the week, which is the first few days of trade, and then we hop over into more of our discovery period phase, right? And that's what we consider to be where trade has made an opening range for the week, and then we're in this new discovery price range for the week, right? And so without further ado, let's kind of talk about a few things. One is, it's been a U.S. holiday, and the U.S. holiday was Thanksgiving, and after Thanksgiving, there's always what we consider here in the U.S. to be Black Friday, right? And so there's always great deals on subscriptions, on literally anything that you'd like to buy nowadays on Amazon, right? And spillover effect is another thing that we like to call is Cyber Monday. We're going to talk about that on kind of a macro perspective for markets, but before we do that, let's talk about some deals that are happening over at Bookmap. So the offer that you are seeing is Black Friday special and a Cyber Monday deal, both of which expired December 6th for the Black Friday special, and then December 12th for the Cyber Monday deal. If you want to use the affiliate code DARMA, that would be great. That helps support the stream. That helps support everything in which we're trying to do in collaboration with Bookmap and just getting on here and providing some market outlooks each week, right? And so those are two great deals that if you're already paying for a subscription at Bookmap, it's best to probably just get the deal on an annualized basis, right? And so there's that. And then let's talk about, I kind of went through who I am. So for those that are unfamiliar, right, my name is Spencer Riegle. I am Chief Crypto Options Trader and Strategist at DARMA Capital Trading. And you can find me at _RIEGLE on Twitter. Or you can reach out to me personally on LinkedIn at Spencer Riegle, right? And so each session we like to start with a disclosure, just to note that all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, digital currencies, perpetual futures, options, all derivatives in which we speak about involve substantial risks, right, and are not suitable for all investors. Please use only risk capital when you are trading. Risk capital we deem to be capital that you're okay with losing the full balance, right? And while obviously what we talk about here is risk mitigation tools, and we'll talk about some of those this week, about how to approach some of these markets that are increasingly more volatile as the year progresses. But first and foremost, it's always about risk mitigation before risk taking, right? Risk reward always needs to be skewed in your favor before taking or making a decision. It doesn't really make a lot of sense to take trades that are skewed inversely, right? On the agenda for today, we're going to talk about macro. There's been a couple of new macro events, some that have actually developed over the last 12 hours. And then we're going to hop in and we're going to talk about our weekly price map update, and then talk about strategy around that. And then we might even have some time this week to talk about some additional coins, right? So if you're in the Discord, we are in the Discord within Bookmap server, but specifically in DARMA Capital Trading channel. each day, and we're talking about price levels and generally just answering any questions that anybody has when it comes to markets and specifically in crypto, right? So let's talk about kind of a macro events. What's kind of happened since last week? So last week did a recording that should be uploaded here shortly. Just talking about U.S. holiday and seasonality trades as we head into end of year. Since that hasn't been uploaded, let's just go through a brief summary. So last week was a U.S. holiday, which is Thanksgiving here in the U.S., and that's oftentimes seen to be a time where U.S. traders step away from the desk. It is historically usually a lower liquid environment, and some moves happen in crypto from the last previous cycles, right? And so rewind to where we've been. We priced up to 100,000 Bitcoin, nearly shy of 100,000 Bitcoin. We didn't get the infamous 100,000K print. The September dated futures for next year priced over 100,000. So if you're looking at the forward curve, yes, we got 100,000 print, and the market was expecting next year's September prices to be over 100,000 in Bitcoin. But for spot prices, we did not get the fireworks print or trade of 100,000, right? And so with that in mind, that is usually a very psychological level, right? 100,000, everybody's kind of waiting for it. I had text messages from friends that were saying, oh my gosh, it's going to actually happen. Oftentimes, when everybody's expecting something to happen in markets, it doesn't happen. Why? It's already priced in, right? And so since then, we saw declines to just briefly over 91,000, right? Quick declines last week that traded down to 91, 91 and a half, and then as the week progressed into Wednesday, Thursday, we got a repricing of Bitcoin, right? We traded right back to those previous week highs, roughly around that 98,000 level to close out the week Friday trade, and then to close out the November month, trading month, right? And so big expiries to talk about last week were November 29th. Why is that a big expiry? Well, the reason for that is we had a U.S. primary election that was widely driving flows in the crypto market specifically because it's the first time in a long time, if not ever, that the U.S. has been favorable in terms of regulation for the crypto industry. And so with that being said, that just means option trades need to happen in November, and that natural expiry would be that initial Nov 8, right after the election day, that Friday. But then the next, right, where you're going to get that monthly liquidity and that option strikes, and in that option duration is going to be your Nov 29s, right? Monthlies oftentimes have a little bit more liquidity, tighter spreads, and they're easier from a kind of a systems perspective for larger institutions to just trade the monthly expiration versus trying to trade some of these shorter durations, right? Those pop-up custom durations, right? And so while Novate did have a lot of volumes and a lot of open interest and was incredibly important, Nov 29 was kind of the conclusion of that. And then the DEAS 27 now is front and center for the end of the year flows prior to inauguration, right? Inauguration being the next major calendar event outside of end of year, right? So DEAS 27 obviously is going to be a very important end of year date, right, to keep on your calendars. But Jan 20, when Trump steps into office, that is going to be your next large event, right? And so what does that mean? That means the DEAS 27 options expiry is also important, as is the Jan 31s, right? And so why Jan 31s and why not right around that Jan 20, right? If you were to look, we have listed contracts that are able to expire in DEAS 27, but the next natural strike or next natural duration is going to be your Jan 31s, right? And so that's where your inauguration flows are going to sit. That's where your risk is going to kind match up with. And so those are two expiries that we're widely monitoring as we kind of head into end of year, right? So with all that being said, macro events outside of kind of just fundamentals of the markets and those expirations, South Korea has seen some large macro events over the last 12 hours, right? The Korean president, South Korean president, has stated martial law last night, which widely surprised markets kind of heading into trade this morning, and has created incredible volatility within the Korean won, which is interesting from a macro perspective, because that is a currency in which there's a lot of implications, right? So we're talking about a first world government. We're talking about large companies in terms of Samsung, Sony, right, that are doing business in South Korea, right? You have a U.S. president that's stepping in, that's widely outspoken on tariffs, and the Korean won obviously has seen some volatility this morning, with the statements coming out that whatever liquidity is needed to stabilize the markets is what will be given, right? And so again, that speaks to kind of a fundamental flaw within fiat currencies, that whenever there's a crisis or whenever there's a problem, we usually print more money, right? And so how does that impact markets? Well, it's a little bit too soon to know. We can obviously speculate. Obviously, speculation is we're seeing the same fundamental problems within fiat currencies. Assets tend to do a little bit better longer term when there's destabilization within fiat. However, short term, volatility within larger fiat currencies does create problems for risk assets, as risk assets are margined in fiat denominations, right? So the expectation would be realized vol picks up kind of and continues to pick up until that situation is resolved in South Korea, right? And it's undetermined where the spillover effects of that volatility will impact the rest of the market, right? Global market being, right, U.S. markets, Euro markets, right? Where are those collateral strings tied to? And so those are events that are kind of happening in the here and the now that are unforeseen how that will impact, but that is something to note as we kind of head into end of year. Another thing that we should note heading into end of year is, while we talked about the Black Friday and the Cyber Monday deals, we should talk about the consumer, right? And historically how the consumer is impacted during these periods of time, just seasonally, right? And so how that usually gets priced into markets, what's to think about that. Usually, if you think about some of the larger U.S. holidays, right? If you think about some of the holidays kind of globally, outside of just U.S. holidays, we're entering a very holiday stretch, right? Whether that's you're here in the U.S. or you're abroad and you're in different countries. Holidays during this period of time, during these months, are often widely celebrated, no matter where you're at, right? And so what does that mean? That usually means that consumer is going to spend money, and the consumer usually is strong during these periods of time, right? Not to mention, businesses cater to those consumers, right? And you're seeing that in the terms of deals, right? So Black Friday deals, Cyber Monday deals, right? Those are all reasons for the consumer to spend more money, right, at discounted rates. Well, if you're going to spend, let's say, 100% of that capital over the next year, well, if you're looking at your budget and you're getting a 60% discount, or you're getting some of these great discounts, you might as well just spend it now and save over the duration of the year, right? And how does that benefit the businesses? Well, that benefits businesses, right, because they value capital up front. They don't have to think about this capital about coming in over the duration of their fiscal year. They can think about it right here and the now, right? What does that mean? Well, they can deploy that capital faster for growth. They can deploy that capital faster for potentially paying down debts that the company has, right, for growth. they could think about using that capital and potentially not even deploying the capital in a growth perspective, but just sitting on the capital and maybe treasury bonds, CDs, high interest rates, right? And using that capital for increased generation through interest rates, for what's going to be seen at the end of the year as growth to the bottom line, right? And so that is both good to the consumer and also good to the business. And oftentimes we see this, what's considered to be a Santa rally, but fundamentally the consumer is just spending based on all of these behavioral aspects that are going on globally, right? Not to mention there is a new budget that's released every year, Jan 1, that needs to be put to work, and that money is allocated in the markets, right? Collateral is priced in hedge funds, in large money managers, and that money then needs to be put to work, right? And so that is a lot of buying pressure that comes to the market during this period in time that fundamentally supports the bid, usually during this period in time, right? Crypto obviously is a smaller market in terms of value, right? So we tend to see a little bit more volatility, but as we've kind of talked about over the last 4 or 5 months, from a macro perspective, it's a favorable environment for crypto, right? So the bid being supported continues to be interesting, right? Let's talk about that bid and where potentially we could go to the downside, and where the expectation is that bid would resume, right? We are in what's considered to be a straight up market since November 5 elections, right? That we'll also talk about right now. So macro perspective, that's kind of what's going on as we head into end of year, and as we head into that infamous Jan 20 date where Trump steps into office here in the U.S., which could potentially impact crypto markets, right? All right, so let's hop over to our weekly outlooks, right? Yeah, I'm just reading some of the Discord. So yeah, we'll get to some of those. So yeah, everybody scored bets, right? Everybody was on the bandwagon to see that 100K spot print. Hopefully we get it, right? That'll be a historic day in crypto. So all right, so what you're looking at here is on the screen that I'm sharing is on the top. We're going to go over let's go over Bitcoin weekly outlook, and then on the bottom you'll see the Discord, right? So if any questions, feel free to drop them in. I'll get to them after we kind of go through the outlook, and then we'll go through a kind of an interactive Q&A session. If you guys have any coins that you want to go over, we should have time for at least 2. So let's dive into those. Feel free to drop those as well. So what you're looking at here on the left that I will scale to size for you is price map. Price map is our quantitative and qualitative data. We are making decisions every single day, every single week, every single period based on this data. It is used as a risk overlay tool, but also risk is a double-edged sword, right? So on one side of the sword you have risk mitigation, on the other side, if you swing it hard enough, you have risk taking, right? And so it can be seen as both perspectives, right? And so we opened up the week, right? Let's notate the weekly directional. That's the figure in which we talk about each week that notates our directional bias on the markets, right? So under it, we believe the market to be a negative, and it's fair to assume that the market could see declines through the duration of the period. Over it, that seemed to be positive, right? You can see scaling through the duration of the period, right? And then every other color, every other name, little 3-letter, 2-letter acronym is where that market could go over or under that directional, right? So we try to keep it fairly simple on the weekly streams. Under this figure, negative, over the figure, positive, right? So that figure is 96,643, right? And so we opened up the week, we traded immediately under that figure, right? And that seemed to be negative. However, we reversed trade quickly and found a base over the weekly directional, right? And so where is that market going to go if it's going to trade over the weekly directional? Well, one thing to note is anything within this critical range, and that critical range is defined by the UP to the DP, right? 101.051.5 down to 92775.5 is considered to be regular range for the week, right? And so I know it's quite a wide range, but if you kind of look over the last few weeks since the election, we've been trading that range fairly frequently, right? So a trade up to that 100K, a trade down to that 90 flat almost, and then a trade right back to 98, right? So it's fair to assume that that would be normal again, right? Until it's not. And so if we scale over and we hold the base over here over the weekly directional, well, that's going to be important for a couple of different reasons. One is that's positive on the market, right? A positive market means the market can scale. That's a fact, right? If the market's going to scale, where's it going to go? It can go to the weekly CR plus, right? Retest of this previous week's high. Previous week's high is going to be a very psychological level because that means we have the opportunity to make a play for that infamous 100K spot print that everybody's kind of waiting for, right? So if you see a base over the weekly CR plus at 99 or 96,643, it's a possibility that this market could continue to scale. And where are we going to scale? Well, first we got to take out the previous week's high. But if we keep testing the previous week's high, the more times we test it, the greater likelihood is we're going to break through it, right? And if we break through it, where are we going to go? Well, we're going to go to an all-time high. That all-time high is going to be defined here within this critical range as 101.051.5, right? If the market's good, it should trade right through there, right? And as crypto markets do, they like to induce a fair amount of FOMO. If we trade over that 101.051, well, the expectation is two targets, right? Target one is the 105.189.5, and target two is if we really get that extension up into that 109.3275, right? That would be a massive extension on the week. But based on how we've been trading, right, if you kind of take a step back here and let's look at more of a daily, how we've been trading on the daily, to be quite honest, an extension to 110 from where we traded last month, roughly 65 low to almost 100K high, had to be a calm week from what we've been experiencing, right? So UT2 would be the upside figure here for that extension on a positive week, right? If we really get going, the extension would stall around 115.5, right? Each day that passes, the lower likelihood is that we reach these higher extensions is accurate, right? If there's less time involved for trade to hit these levels, probabilities go down, right? And so if today's Tuesday, if we kind of hold this range is what it looks like under the weekly directional, well, the odds of us scaling to that 115 drop a day, right? And tomorrow they'll drop another day, Thursday again. And those probabilities will continue to decrease fundamentally as the duration goes by, right? And so Saturday at 6 p.m. Chicago 0 UTC, we'll get some new data, and then we'll see where the next week takes place, right? So that is the upside expectation. Let's look at the downside, right? Because we are currently trading under the weekly directional at 96643. Market's been digestive. It's still positive as the expectation has kind of been outlaid in our macro talks each week, right? So fundamentally, the crypto market looks to be favorable to the bid. What does that mean? Well, that doesn't mean we can't see declines. It would be normal to see normal profit taking, right? Last month around this time, we were 65,000. Today, we're 95.5. What's the percent gain on that? Let's take a look, right? I'll pull up a calculator real quick. So 65 minus 95 divided by 65, right? So it's almost 46% gain month over month, right? Just because we see declines does not mean the market's negative, right? And so I hopped on Twitter last week when the market declined from 100,000 down to 91,000, and it seemed to be everybody was panicking, right? Doesn't really make sense. Why to panic? Because you need to take the bigger picture into perspective, right? One, we're at an all-time high, right? Two, even at 90,000, we're still at an all-time high from last month, right? So that's favorable, and that's positive, right? Obviously, if you got caught buying the top at 100,000, yeah, sure, you're going to be a little bit concerned, but fundamentally, if the market pulls back, let's say even to 86,000 here, based on the weekly, the expectation is the market's going to bottom there and make a play higher, right? Is that still higher than the 65? Yeah. It just means that we are experiencing further realized fall, which is the expectation, right? As new price hits new all-time highs, there's new price discovery. Price discovery fundamentally is unknown. That's why it's called price discovery. Volatility is expected and further realized fall is to be expected when there is unknown price discovery, right? So, if the market were to decline, let's see where it would go, right? We're digestive, 96,643. Anything under that, the expectation is we're going to trade lower, right? Previous week's mid is hiding right behind this weekly CR minus. I want to make sure that you guys can see this on OBS. Let me blow this up a little bit. Yeah, should be able to see it a little bit better here. Okay, so 96,643. Anything under that, it's negative, right? Where are we going to go? We're going to test this 94,709, that weekly CR minus. If we can't hold that weekly CR minus, where's the expectation? We're going to trade down to that DP level, right? DP is going to be interesting. DP down to the CRX minus, right? This defines your critical range and your critical range extremes. Here will be interesting just purely based on price structure, right? These were last week's lows. You'll see previous week's low is also hiding right behind the CRX minus, right? Anybody that was a buyer of the lows there is sitting pretty here. If we retrace those prices, they're not going to be looking pretty, right? Where would they keep their longs? Well, they want to at the least take a scratch on this trade, right? So they're likely have their sell stops in this area, right? So those will get triggered, right? So if we trade under 92,775.5, well, where are we going to trade? 97.06.5, right? If those get triggered, where are we going to trade? We're going to trade down to this downside target one, right? Which is at 88,637.5. That likely flushes these lows, in which you get somewhat of a clearing of the board for your first downside target, right? Where could trade extend to? Well, based on this green level, which is what we consider to be the R level, which is where we expect the buying power and buying pressure to really step in and resume, where that bid would step in, is 86,568.5, right? And so if we were to trade under those recent lows, first we take a psychological flush of the lows and see if we bottom here at the downside target one. If we don't, well, okay. Our expectation is the bid would resume here, right? If the bid does not resume and we break trade under 86,000, that would be reason to be concerned. That would be what's considered to be a hedge theme on the week, right? A trade under this green dash line down here. And a reason to maybe hedge up, right? Or stop looking to buy the dips for the moment, right? Why? Structure is broken, both on a price structure level, right? We broke this previous week's low, but also on a price map structure level, right? And what we're going to do next is we're going to pull up resting paper in Bookmap to see if it aligns with some of these levels. But that would be your visual level to be concerned, right? And that's important when we're thinking about risk. And thinking about taking risk in the markets this week, right? And so, all right, now that we've kind of outlaid the week, right? So DT1 to the UT1 is kind of that first target point after break of the critical range. Everything within the critical range is considered to be regular trade. Anything under the directional is negative. Anything over the directional is positive. If we want a potential retest of all-time highs, we have to stabilize and base over that 96,643. Otherwise, it's just not going to happen, right? And that's a fact, right? If we can't get over that level, we can't touch 100,000. So I know it's incredibly simple, but when we are making trades, it's best to simplify things before overcomplicating things, right? And so what you're looking at on your right side is the perpetual multi-book of Bitcoin. And this is going to show us where there's going to be resting orders in Bookmap that we can see where that potential offer is going to be resting in the book, and then potential bid will be resting in the book as well, right? And so the key figures in which we talked about were potentially down to your 86,568 is where we would think a resting buyer would sit in that bid to resume, but more specifically, in this critical range extreme, in this critical range extreme, critical range defined by 92.77.5, all the way down to your 97.06.5 is your critical range extreme, right? If we take a break lower here, well, previous week low aligns here with 97.06.5, it would be normal to see a bid setting here, right? And so where do we see bid setting in the book in Bookmap? A little bit lower than that, actually, right? And so it looks like bids are setting right around that 90,000, which would be right actually under what would be your critical range extreme. And it looks like they are bid up to roughly 9,200, which would be right under this level here. But there's not a significant amount of resting paper that we are seeing in the book until those levels, right? So it looks like we have 1,500 coins sitting in the book down there. If we really dive into some of the smaller size, we see 229 aligning with that 92, which would be that kind of that critical range extreme level that we were talking about. 93, we have a smaller bid here, 135 coin. That would align with your weekly DP, right? That would be considered to be a normal kind of test of your critical range on the week. And then smaller lot size here, totaling 200 lot, 94, 93, 800, right? Which is kind of resting in this area, which was what we saw trade this morning, right? On the offer, same thing. Offer is relatively light. We have 100 lots scattered throughout the book, so 97 right in this weekly directional would be your first test, so 131 lots. Small enough to potentially price through that real quickly. The next offer that we see sitting in the book here in Bookmap is going to be 99, a 99,300 it looks like, right, which is right around those previous week's highs, which that's a logical level to rest an offer, right, especially if you got stuck buying the tops. You want to get out at break even, just as we talked about getting out at break even if you got stuck buying the bottoms, and you're kind of working this larger range, right? And so outside of that, if we were to really scale back, we have resting paper here at 100,000, which would be normal. But again, if you're just to take an objective view of the book, it looks like the offer, again, is lighter than the bid, right? So that is Bookmap, and that is going to be your weekly outlook in with collaboration of both of them. So without further ado, let's kind of jump over to Ethereum, and let me not confuse you guys. So I will actually get this to be. I just had some old data on there. Old data isn't as helpful, and it's actually shouldn't be used when trading. So this is the current data for the Ethereum chart. So let's hop over here onto the Bookmap as well. This is on your right. You're going to see ETH perpetual multi-book, again out of Bookmap, and then on your left is price map, right? And so again, weekly directional here lines 3644.09. ETH was positive on the week and has been positive to kind of close out November. We've seen the bid in ETH come alive, which has been kind of longly waited for, and it's taken a little bit longer in this cycle versus previous cycles, right? But once it caught fire, it's really gotten going, and we saw a trade kind of start the week, and we tested 3780s, but more specifically kind of a little bit lower, so just over 3750s, and month over month, again, we saw a significant increase in ETH. Let's not discount that. So those previous lows, in which we talked about last month, were roughly 2375, right? I remember those trading November 4th, right before the election, and looking at that liquidation right before the election, thinking about what if those are the lows, right? And so those wound up being the lows and wound up being significant lows. So 2375 minus 3750 is kind of that range, divided by 2375. Ethereum has seen a range of roughly 58% month over month, and a gain month over month of positive over 50%, right? So probably 55 if we were to really get into the nitty gritty there, but we haven't seen a 55% increase in Ethereum in a long time, in a month, right? And so that has been exciting to see. With that being said, again, volatility is something that we should notate. As crypto becomes front and center in U.S. politics, but also as all-time highs get traded, there is price discovery that needs to happen, right? And price discovery means capital needs to be sold, capital needs to be put to work and allocated, and all forms of those transactions create buyers and sellers outside of what we might normally be used to, right? And so also the faster a market accelerates higher also opens the door for potentially of deceleration to find normalcy, right? I think about it as almost stretching a rubber band, right? The further you stretch a rubber band, yeah, you can keep stretching and keep stretching and keep stretching and keep stretching, and you can really make that rubber band a lot larger than what it is, but eventually that rubber band will snap, right? And so if the rubber band snaps, where is it going to go? Well, it's going to find that equilibrium, right? And depending on how far it's stretched to its extremes will determine how fast and how hard it snaps back, right? And so it's always important to lean on the macro, right? Fundamentally, the environment is favorable to the bid, but volatility in the short term is expected, right? We've seen a 55% increase in over a month. A decline of even 25% would be probably fairly normal, right? And so that just opens the door for very large ranges in a very large realized fall environment, right? And so under 3644.09 is negative on the week, and that's exactly it. So we opened up, we tested that upper level, that weekly CR plus. If we can't price through the weekly CR plus, but more specifically, if we can't hold this previous week's high, well, the expectation is we're going to come back down and at least test the previous week's mid, if not the previous week's low, right? And so that's kind of what's happened, right? And so a quick test of the weekly CR plus projected immediately. If we reject that, where are we going to go? Well, we have to base over the previous week's high, otherwise the market to scale in the here and the now is vulnerable, right? Okay, that is a good notation, right? But specifically, if we cannot hold the previous week's close, fundamentally, that means the week over week is negative, right? So if we can't hold that, where are we going to go? 36.4409. If we can't hold that, where are we going to go? Weekly CR minus, right? Trade has been choppy through the weekly directional. It's better to use the previous week's close on this one, just based on how we opened up, right? So if we open up positive and immediately we reject, right? It's almost thinking about a green candle going red, right? Well, that's potentially negative, right? If the market's going to scale, it should keep scaling, right? It should perform perfectly. And any sign of weakness to us should be seen as an imperfect market, and that means at the very least, one, we should not be max leverage, right? We should not be placing max bets. Two is we should potentially downsize on our thesis, right? If you have a max leverage position, you have a position in which you're seeing a month over month 55% gain, and you're concerned about a potential pullback in the market, well, the cues are within the market not being perfect, right? If the market's going to scale, it will continue to scale, right? But if we see a break at the previous week's close, that's your signal. Okay, now we're going to come test this weekly directional. It's absolutely possible that we could base over the weekly directional, but if we get this choppy trade, right, and if we can't hold, that's another signal that we could be potentially heading lower. Where are we going to head? Weekly CR minus, right? CR minus or CR plus down to CR minus. That would be a normal trade. That is a CR rotational trade, right? So 35.39, which is where we've bottomed out today. This is potentially a good low, right? Market could base here for the week and scale higher. Where's that validation? Well, that validation needs to be a base over that 36.4409. Otherwise, it's just noise, right? It's just noise here, and absolutely you can day trade it, right? Buy it off the 39. But the expectation is if we can't validate this 36.4409, we're probably going to chop around here and retest this level. So you're going to get a better entry or get the same entry, right? Why is that important for trade this week? Well, don't get caught up in the thesis that last month's trade needs to be this month's trade. It doesn't. And that's a fact. And so any trade that's held under 35.39 is weak. Where are we going to test? That previous week's mid, right? If we can't hold the previous week's mid, the natural kind of rotation lower would be this DP. That DP defines that lower critical range. 34.34 would be that level. The extreme of your critical range is 33.1164. If you break under this 3400, the expectation is we're going to come test these previous week's low, right? Which was the expectation if we couldn't hold the previous week's high, right? Our rotation back down to the previous week's low to test that extreme. And more importantly, your DT1, your downside target 1, aligns 31.8922, which could be a solid buy, right? If we can't hold that DT1, where do we expect the bid to resume? 36.679. Anything over 36.679, right? Structurally, the market could continue to rally higher, right? So you always need to be open to that, as that's the bias for the week. But for the market to scale in the here and the now, it has to get over that weekly directional at 36.44, right? Now, where would the concern be on the market for the week? Anything under this dashed green line down here, which is roughly around 3,050, that would be a reason to be concerned for a potential extension lower, right? Where are those two extensions, TT2, 29.44, and a real bad extension would be 25.7709. If we trade 25.7709, structurally there would be a lot of problems with the market, and there would be a large reason to be concerned, not just in the short term on the weekly basis, but in the long term as well, right? So, with that being said, let's hop over here to Bookmap and see where we have some resting bids and resting offers here. I'm going to grab some water real quick. But one thing to notate is 3,800 is where you're going to see that resting offer, that resting paper. You're going to see around 5,000 coin here, from what it looks like, sitting there on the offer. That aligns currently with that weekly CR plus. If we scale over the weekly CR plus, where we're going to test that weekly UP. But if we break out of that weekly UP, again, crypto markets are FOMO based, right? When everybody wants to buy, they want to buy, and they don't usually care what price they get in at, right? And so if you see a base over the 39.23, the expectation is that upside target 1 and potentially that upside target 2 for that upper extension on the week, right? So those are upside targets, downside targets, kind of the expectation for the week. Your resting papers at that weekly CR plus, that is going to be an important level to notate for the week. On the bid, there isn't significant bids sitting in the book outside of just over that 31 level, which is roughly right in here, and would align where with the expectation for the bid to resume lower around that 3,000, right? So that is Bitcoin and that is Ethereum. Weekly outlook, we kind of went over a little bit and talking about kind of the outlook, but any questions, let's open up for Q&A. I will be around for the next 5 minutes before I hop back onto the desk and do some trading. So I see here in the Discord, there's one question here. Hi, cryptocurrency futures is what I trade. I'll be attending. Very interested. Oh, perfect. So not a question. Yeah. So a couple things. One is you're looking at both the perpetual market on the left and on the right. This is a multi-book, so this is a combination of multiple different perp markets. In crypto, on the left is specifically Ethereum derivative perpetual contract. So that's specific to this data. But yeah, perpetual markets in crypto are immensely valuable for a lot of different reasons. I see a question popping up. Stephen, I know that you kind of mentioned that you were interested in the outlook for the week. Was there any questions that I didn't cover that you'd like answered as well? Perfect. Yeah, I mean, I will be in the Discord. If you want me to load up some other data, just for some weekly outlooks as well. I know that we kind of went over on just the Ethereum and Bitcoin outlooks, but feel free to drop those in. We can kind of go over those in the Discord. If you're on YouTube and you're watching the YouTube, make sure to hop over to Bookmap's Discord, and specifically the DARMA Capital Trading channel in there if you have any questions on weekly outlooks on some of the coins that you're following. I know there's a ton of coins that are popping up, right? I saw Link was popping up. Ripple is a favorite that seems to be popping up over the last, honestly, 6 days, right? That's been just straight linear move, so that's been a fun one to watch. And that options market's actually just gotten on board in derivative and in the OTC lane. So those are always fun to watch. Yeah, no problem. And then I see Kathy typing, so I'll leave it open for a couple minutes, and then we'll close it down for the week. All right. I don't see any other questions. If you have them, I'll stick around in the Discord, so they will get answered, no problem. So feel free to drop them in there, and then I'll see you guys all next week. So thanks for hopping on.